Hey, good morning. This is May Valensky with Driving Markets. I hope you're all well. Just rearrange the camera a little bit. 1 second. That's it. Hey, okay, so what is driving markets today? We've got as follows. The markets yesterday came off slightly in the US and in Europe, still following on from the fear of a more hawkish Fed increasing interest rates in 2022. What's likely to happen? So the Fed minutes said that they're not really happy with the levels of inflation and they may need to taper the stimulus program, which was set up in the pandemic. They might have to taper it much more quickly in order to reduce the amount of liquidity in the market, which will hopefully reduce the amount of inflation by making the market less liquid. There'll be less money floating around. In addition to that, they're probably going to raise interest rates at least 4 or 5 times, in my opinion. Just a quick caution: everything said in this particular piece is an opinion only. All right, so where are we going from here? So I expect that the US markets, which is the lead indicator in the US, especially the Nasdaq, but I expect the US indices, that's the Dow, the Nasdaq and the S&P, to come off further. That means to fall further. The valuations of the shares within the US are huge, super inflated, and they do need to come down a bit in order to make the valuations of those companies realistic. However, someone this morning mentioned to me, he said, Mayor, you're too much old school. The whole world now is run by the 25-year-olds and the 30-year-olds, and their digital and high-tech knowledge is far superior to your knowledge, and therefore it's likely the stock markets are just going to continue rising forever. Good point. However, I don't actually buy into it, because I always believe that whatever goes up needs to come down. We've had a bull market now from 2010 all the way through, even earlier, 2008, after the banking crisis, when the central banks came in with the quantitative easing program, which allowed the flow of money to all those banks that criminally destroyed the financial system, and they are back up there making millions of profits that caused huge pain to masses of the population, but they still got billions fed into them. That quantitative easing program started in 2008, 2009, and continued all the way through to today. And that's being eased off a little bit. There was an extra stimulus package given by the central banks back in 2020. So let's go back to where we were. If the pandemic had not happened, then the markets would be even higher than they are now. However, the pandemic took some steam out of the markets, and as a result, the markets came down. And then along came Donald Trump and spent around about $2 to $3 trillion on stimulus packages by sending money out to individual families to support them during the pandemic. That has caused effectively a huge wave of inflation. Joe Biden himself has just done a 1.9 trillion payment out, and he would like to do another 2 trillion. Take that out of the equation, the markets would have fallen apart. So my bet is that if you're going to put money anywhere, I've always said you should be putting it on a short position. But as someone said this morning, I am the only one in the whole of the financial system that believes the markets are going to go down, where everyone is talking about the markets going up. They're infallible, they'll only go up, they'll never come down, and that could be the case. It could be that 99.9% of people are 100% correct in their view, and only Mayor Valensky is the only one that is saying that markets are likely to come down. But I'm absolutely convinced that markets are going to come down due to several factors: interest rates, inflation, pandemic, overinflated prices. There'd be huge profit taking. The banks in the world suck in the public and then they spit them out. So be cautious on that. Another interesting point that came along, very, very interesting point, was regarding cryptos, Bitcoin. Okay, so there's been $14 billion lost on illicit addresses based on Bitcoin criminal transfers. Now that is a 79% increase on 2020. So you could have a situation whereby the authorities and the governments could start introducing regulation and legislation regarding cryptocurrencies. If that ever was to happen, you would see a significant drop in cryptos, and a significant drop in the lead. The flagship is Bitcoin. Be aware, governments and authorities do not like money laundering and don't like the fact that cryptocurrency is now used for money laundering. So 14 billion in money laundering in 2020 is a massive number, and that is a red light to the authorities. So you've got to be aware that when it comes to crypto trading, you could always have that fear or awareness that if regulation or legislation comes in, then the cryptos and Bitcoin will be hammered. If you notice, interestingly, the Bitcoin came down significantly after the minutes of the Fed meeting on Wednesday, and as a result, Bitcoin's now running at about $42,000 a shot. So it is impacted by financials around the world, even though it's got absolutely no economic or financial basis to it. If you want to learn how to take out put options or shorts on the market, then give me a call and you can contact me on any one of the normal media links, which is LinkedIn or WhatsApp, or you can do a YouTube. You can subscribe to this YouTube or my Instagram, Walensky Mayor, and I'll be happy to go over how you can open up a trading account, put in a minimum of £1,000. That's the minimum to put in, absolute minimum, and then see if we can do some trading on the downside, which I believe the markets longer term are going to be downside. So just be aware of that. What else have we got to say to you? So yeah, that's more or less it. This is Mayor Walensky with Driving Markets. Only trade with regulated platforms, and have a good day. Trade small. Speak to you soon. Have a good weekend. All the best.